Alright, welcome back everyone. Today we're going to look at AMD's Q2 2025 earnings report from August 5th, 2025, and here's what I want to cover. First, we'll review the quarter, then discuss what management is signaling for the rest of the year. Let's get into it. First up, the good news. In terms of revenue, AMD beat estimates coming in at $7.69 billion, which was up 32% year over year, and slightly above the $7.42 billion analysts were expecting. Looking back, this marks the second consecutive quarter of accelerating growth following the industry-wide slump last year. Remember that Q2 2024 revenue was down 27% year over year, so this is a nice turnaround. From a segment perspective, there were two notable bright spots. First, data center revenue came in at $3.2 billion, or up 14% YoY. This was driven by record EPYC CPU sales, which saw strong demand across cloud service providers, enterprise customers, and channel partners. Server revenues were also boosted by continued share gains. In fact, management noted that AMD now has nearly 25% market share in servers, which is more than double the industry average. And while the server market itself is still tough, management believes it can continue gaining share for the foreseeable future, given its competitive advantages in price performance. That's the good news for data center. The other bright spot was client and gaming, which saw a whopping 69% surge in revenue to $3.60. This was thanks to record Ryzen desktop CPU sales, strong demand for Radeon GPUs, and normalized console chip shipments versus last year when supply was constrained. Within gaming alone, GPU sales were particularly robust in the quarter. You know, when people think about AI and generative AI, they usually think about NVIDIA, but that's not really the case. AMD is winning in the AI accelerator space. In fact, AMD launched its next-gen Instinct MI350 accelerators in Q2, which were received very well by customers. They beat the MI300 in terms of performance per watt and cost less than NVIDIA SHGX A100 system, according to Mercury News. One large customer described the MI350 as a, quote, very compelling product, end quote. To date, AMD has announced 4 new products in the lineup, but it plans to launch more SKUs in the near future. In addition, management noted that the MI350 accelerators are ramping faster than initially anticipated, which bodes well for the ramp of the data center business in the second half of 2025. In terms of profitability, AMD did see a sequential decline in non-GAAP gross margin, which fell to 43% from 48% in the previous quarter. But importantly, this was above management's expectations of 42%. On a year-over-year basis, though, gross margin plummeted to 43% from 53% last year. A big reason for this was the previously disclosed $800 million write-down in inventory related to U.S. export controls on sales of the MI308 AI GPU to China. While these export controls didn't impact AMD's reported revenues, they did result in an inventory write-down and lost revenue in the quarter, excluding the $800 million one-time charge. Non-GAAP gross margin would have been 54% compared to 53% a year ago. Speaking of profitability, non-GAAP operating income fell 29% year over year to $897 million. On the bottom line, non-GAAP EPS came in at 48 cents, which missed consensus by 6 cents and was down 30% year over year. But again, the $800 million write-off reduced earnings by about $1.02 per diluted share. Finally, free cash flow generated over $1 billion in the quarter, which was up from $825 million last year and shows strong cash discipline. Now let us turn to the balance sheet, where we can see that inventory was down sequentially and year over year, which is usually a good sign. In terms of book-to-bill, management noted that it came in at 1.15x, which means AMD received more orders than it shipped in the quarter. In terms of key takeaways for the quarter, AMD saw broad-based strength across most of its product portfolio and geographical segments, allowing it to post solid revenue growth. However, gross margins were under pressure from the MI308 inventory write-down, and expenses were higher due to investments in the AI roadmap. Now let's shift to what management had to say about the rest of 2025, starting with Q3 guidance. AMD expects Q3 2025 revenue to be around $8.70 which was above the $8.3 billion consensus estimate. Typically, third quarter guidance is fairly conservative. So, this is a positive signal. In fact, management said it could be plus or minus $300 million. So the midpoint is $8.7 billion. But it could range anywhere from $8.4 billion to $8.9 billion. Of course, these targets exclude any potential MI308 sales to China in the third quarter because it's uncertain whether the U.S. government will approve export licenses. At the moment, AMD does expect shipments to China to resume later in the year if approved, but it doesn't expect any meaningful contributions to Q3 results. And that's worth noting. Moving to the second half of 2025, management highlighted 5 drivers of growth. Number 1 is the ramp of MI350 series accelerators to address growing demand for AI workloads. Number 2 is ongoing share gains in EPYC CPUs and the server market. Number 3 is the upcoming Ryzen 8000 series desktop PCs, which should drive strong sales in client and gaming. Number 4 is the upcoming launch of Strix Halo, which is AMD's top-tier gaming brand that will challenge NVIDIA's RTX 50 series. And number 5 is the company's console chip business. Overall, the tone for the second half is bullish. As CEO Lisa Su said, quote, "We are pleased with our second quarter results and are well positioned to deliver significant growth in the second half." End quote. Now, what's interesting is that AMD's stock price actually went down after earnings despite beating revenue estimates and providing above guidance for Q3. I believe this happened for 3 reasons. First, margins came in lower than expected even if you exclude the $800 million write-off. Second, the EPS miss of 6 cents might have spooked some investors. And third, there is just a lot of uncertainty around the MI308 export bans. We don't know how much revenue AMD is losing, nor do we know how quickly MI350 ramp will be able to offset this headwind. Until we get more visibility, AMD's stock might continue facing headwinds. In the end, it's not all that surprising that AI stocks like AMD are down today. Usually, the market is forward-looking, and right now, it's concerned about slowing demand for AI chips amid rising competition and a lack of enterprise AI budgets. If I had to guess, the biggest concern for investors is how AMD's AI business compares to NVIDIA's. And given that NVIDIA is almost doubling AMD's valuation, it suggests that Wall Street thinks NVIDIA's AI outlook is much brighter. But I've covered this topic extensively in previous videos, so I won't repeat myself here. Instead, I'll link to those videos in the description. As far as my takeaway on AMD's earnings report, it wasn't perfect. The MI308 export ban is obviously a major headwind for the AI business. But it did show progress on the AI roadmap with the MI350 launch, which should help in the back half. Moreover, margins took a hit from the export ban and product transitions. But it's not yet clear how much of this will persist into 2025. But the good news is that the core businesses outside of AI are doing quite well, especially client and gaming. So I'm looking forward to seeing how AMD executes against its roadmap over the next few quarters. Before we go, remember to smash that subscribe button. Special shout out to all my supporters. Your support is greatly appreciated. Thanks for watching, and I'll see you in the next one.